Okay, good day everyone. Today will be our second day of meeting, our second class, and we are going to discuss new topic. And the title of our topic or of our lesson today is all about the statement of owner's equity. Before we proceed on discussing our new lesson, let us first read the objectives. So our objectives are at the end of this chapter, the students should be able to A. Describe statement of changes in equity. B. Know the accounts that comprise the owner's equity section. And C. Prepare the statement of changes in equity. So before we proceed, let us have first the finance terms that may help you enrich your business English vocabulary. So again, you may check these terms into your finance dictionary or you may surf the internet for the meanings of the technical terms or jargons. So we have here sinking fund, return on investment, amortization, and share capital. So what are the uses of the technical terms above in statement on changes in equity? So we will know more about the uses of those terms on our lesson today. So our lesson today again is about statement of changes in equity.
So, the statement of changes in equity is a financial statement showing the following. We have A, net income or loss for the period. Letter B, we have each item of income and expense for the period that is recognized directly in equity and the total of these items as required by the standards. And letter C, we have total income and expense for the period showing separately the total amounts attributable to equity holders of the parent company and to minority interests in a corporation. And the last, we have for each component of equity, the effects of changes in accounting policies and corrections of errors. Okay, so next is the statement of changes in equity stated otherwise. It is statement that reflects all the elements that cause changes in an equity between two dates of the statement of financial position. So we have here an example of statement of changes in equity sole proprietorship. We have here the Nicanor Trading and the statement of changes in equity year ended December 31, 2018. So as you can see, we have there the capital balance, the additional investment, the net income, and then the capital balance as of December 31, 2018. On that example, in the event of the operating performance during the given period results in a loss, the amount of loss shall be deducted from the beginning capital balance. So that is how we use the sole proprietorship. And then the second, we have here another example of sole proprietorship of Angel and Princess Partnership Statement of Changes in Equity, year ended December 31, 2018. And then, as of January 1, 2018, capital balances, Jenny Angel has 560,000 and 490,000. And also we have here there the total. We can see on our right side of the screen the total and also the additional investment, the distribution of profit, the total, the less partners withdrawal, and the December 31, 2018 capital balance. So the distribution of profit or loss to partners shall be based on the profit and loss agreement or agreed by the two investors or partnership. All right, and then you also have the third illustration. This is a sample of statement changes in equity corporation. And then the example is we have Heisel Corporation of statement of changes in equity. Year ended December 31, 2018. And as you can see on the screen, we have the share capital, the reserves, and the retained earnings. So that is an example of a sample statement of changes in. Okay, next is based on the example we had last on the last slide, let's identify what is share capital. Okay, so share capital, this represents funds contributed by shareholders. So as you can see on the last slides, the share capital there is almost 2 million, it ups to 9 million. So that represents the fund contributed by the shareholders. So an entity share capital may be in form of ordinary shares capital or preference shares capital. All right, so next and last, we have the retained earnings. So what is retained earnings? So when you say retained earnings, it is a line item in the equity that represents the accumulated amount of net income or loss errors of prior periods. So the dividends distributions, the changes in accounting policy, and other equity adjustments other than those arising from contributions from shareholders is what we call the retained earnings. So that ends our lesson for today, and we are going to discuss or continue this lesson next week on our next meeting. So thank you and goodbye.